Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, and this is a daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. Hopefully, you had a chance to watch my midweek report. That's what I do every Wednesday, where I look at the charts and I let the audience know whether or not the targets are still in force from the previous Friday's report. And as we look at this chart right here, you could see a very significant event happened today in that candle, and that is a lower high, lower low. Yes, the Dow did close higher, but that is known as a pivot point. So now we're caught between this support level down here, and whether or not that's going to hold, we don't know. We'll have to see next week. If it pivots higher on Monday, then we have an A to B, right? Pivot lower allows us to put that B there. But if we get a higher pivot on C here, then we could go to an even higher D. And that's the ABCD pattern I've been talking about for weeks. It happens on the way down as well. You could see that we had the A up here. We had a little bit of a pivot on this green candle right there. That allowed us to put a B there. And then the very next day, you can see a lower high, lower low. We had the C, which brought us to a lower D. Now, when you have an ABCD pattern on the way down, and at pivot point D, it starts to go up, you start that over with an A, you see? So now we got A. Now that we have the pivot, we have a B. If we get a pivot higher, like I said on Monday or Tuesday, we could put a C right there. But we cannot do that just yet. In fact, what I think we're going to see for next week is a little bit lower on the Dow, and then we'll possibly see that pivot where we could put a C there and then ultimately leading us to a higher D. Hence the reason why I'm leaving that upside target there. It's a longer term upside target now of 440.82 for DIA. If you're not familiar with ABCD patterns or engulfing candles or any of the technical signals that I consider to be my favorite candles, come on over to Sticky Trades. We have StickyTrades University, where we have technical analysis courses online for you that you can take when your schedule allows. And then after 15 days, if you want to become a member, you can sign up. We're still offering that 15-day membership for free with no strings attached. We have people coming on as members from the 15-day trial period, and you could ask them. They can attest that we have absolutely no sales pressure on anyone. We want everyone to see what we're doing, feel good about it, make money with us, and then let that experience help them make that decision. So that is DIA. Looking at IWM, we're pretty much going to have the same pattern. You see we had the pivot here, lower high, lower low today, and we had this shooting star yesterday. You see that? So here we have the A starting over from a previous D. You see this? So here is the A all the way up here. We come down to B here, and then we had the C here, which allowed us to come all the way down. Notice this candle here, let me get rid of that line. That is not a pivot right there. That is a half signal. And a half signal is basically half of a pivot. We had the higher low. Had we on that day had a higher high, that would have been a pivot. But we didn't get the pivot until here, right there. And that allowed us to get the D right there. All right, so that's happening all over again with IWM. So I'm going to put a slightly lower downside target. We'll have to see again if next week we get a pivot. Not a big move, but we're talking about, what is that, 201.06. 201.06 for IWM. Notice all of these diagonal lines up here are previous price targets that I put. And wherever I drop the line, that's where the point is to the penny. I do not put that price in. I just drop the line, and then that little data box pops up, and that's what I'm reading to you off the charts. So again, downside target next week for 201.06. Have to see if we get to pivot higher, then we'll shoot for a higher D. All right, looking at QQQ, we had, again, a slightly higher trading day. It's very choppy, the markets. We had some big up moves, big down moves, all in this range down here. And I think what's happening is investors and traders are trying to make up their mind which way they want to go. I think the overall sentiment of the market is becoming much more bearish. And so that's putting some pressure on the markets. Every time we rally, a lot of the traders especially are selling into the rally. So yesterday we had a lower high but a higher low. There's a half signal. Today we have a pivot lower. Lower high, lower low. So I'm going just a tad lower. I don't want to go all the way down to that support level because then that would change the game. If we break out below that support, then guess what? Everything that I've mentioned as far as A, B, C, D is thrown out the window because then this is a new A and then we look for a lower B. And again, I cannot forecast that, at least not yet, until that support level down here is broken. So to the downside, QQQ, I'm forecasting that at 470.16. Now moving along to the S&P, this is S&P 500 ETF, same thing. Yesterday and we had on Wednesday long shadows on top. What does that mean? Well, when you have an up leg like we had here from this low right on March 13th, and we see these long shadows showing up after this very short upward leg, those are known as shooting stars. Shooting stars have long shadows on the top that basically have a shadow that's 1.5 to 2 times the length of that green body. And that fits the description of that to the T. So that is a bearish signal. And again, that's why I'm going lower on the S&P. I'm going just slightly lower, but still higher than this low right here from the 13th. So downside target on SPY is 554.66. Notice down below, you see the CCI? It was just about to cross over that zero line, which would have given us some momentum for a couple of days, but it didn't about face and it's starting to head lower. Hence the reason why I'm leaning more to the downside here. All right, let's take a look at the VIX. And if you hang on, I'm going to look at Bitcoin and silver for you. All right, now, this is a little bit more confusing because we have a bearish engulfing candle that's also doubling as an inverted hammer. Now, an inverted hammer is actually bullish when found at the end of a downward leg. Now, we're not quite at my downside target there of 1851, but Monday and Tuesday is going to be very interesting to see whether or not we make another attempt to get down to that lower level. If this inverted hammer pans out, and you can see the oscillators down below are oversold, with the CCI being oversold and hinging, then we could see a little bit of a bump on the VIX, and then it's going to have some resistance at that moving average. Right, so I think we're going to test today's highs at $20.70. That's a little bit more than 5, maybe 5.5% higher on the VIX. But remember, for the most part, the VIX is inversely related to the S&P. So if we're looking at a slightly bullish VIX, then we're looking at a slightly bearish S&P. Okay, so keep that in mind. Those patterns are very important. And again, if you're watching us for the first time here on this channel, each and every week I try to provide another little nugget of educational information, just like I did with the ABCD patterns, the inverted hammers. And those are things that you want to take note and memorize and maybe even practice on your own with different stocks. Just take random stocks and look at the signals and try to put your own price targets on there. And I can tell you that with a little practice, your percentage of accuracy with regard to hitting targets or setting targets is going to be dramatically higher. We were talking about this last night with our equity traders as we were covering the stochastics oscillator. I was telling them as well to go out and practice looking at a lot of charts. I look at hundreds of stocks each day. I don't even know. I've never counted how many charts I look at in a given week or month, but holy mackerel, in a month, I'm looking at thousands of stocks on these charts because we have trading publications that we put out for equity traders, option traders, and even beginner option traders. And I have to search for candidates that look good for our members. And we're doing phenomenally well so far this year. Our percentage of success is very, very high. I'll talk about that next week. If you want, you can go back to the weekly market report. I showed you some of the trades on there to show you how accurate these trades are. All right, so that's the VIX. Now let's talk a little bit about silver, SLV. I told everyone that I am looking to buy more silver. I have a downside target of $28.95. This is very interesting because if you look down below, see that little blue bubble off to the right? See where it says minus 9.2218? Well, when that CCI, that's the Commodity Channel Index, when that drops below the momentum line, that zero line, that black line, we generally get 2 to 4 more days of downside momentum in the direction of that cross, which again would be downward. So I'm keeping that target in place. But in this area, right around 28.95 or maybe 29 or so, I'm going to be buying. I had sold out of 10% of my SLV position. I told myself I wasn't going to do that while silver was breaking out of resistance areas and while gold was going to new highs. But I couldn't resist. The signals were there. It's going to work out quite nicely because when I sell small percentages of my SLV position, and if it drops to a lower price, I take that cash that I generated from the previous sale and I buy more of the same. And that helps me parlay the position into a much bigger position because I do believe if you look at the monthly on silver, this is a major cup and handle here, which is the beginning stages of a breakout right here. This looks to me like a breakout, but I think we'll have a little bit of a pullback. And then I really don't think I'm going to be selling any more silver anytime soon because if it sustains a pivot point higher and goes over this resistance and stays over, then you could take the depth of the cup, which is here, attach it to the breakout point here, and you're talking about $42, maybe $43. If it breaks out of here, holy mackerel, it's going through the moon because that'll be record highs on SLV or silver and the silver futures. Now, like I said, I want to look at Bitcoin because Bitcoin hit my upside target today. I've been keeping track of that. Last week on the weekly market report, I pointed that out to everyone that I have an upside target of 86,213. It hit that yesterday, and look at that. It has a lower high, lower low. Now, I do have a much lower price target longer term for Bitcoin, but I'm going to give you a short to intermediate term forecast down here as that too is showing a lower high, lower low. That's 81,608. 81,608 is my new target. You heard it here first. What I'll do over the weekend is I'll post this chart with some notes to my X page, and I make my trades and my forecast very public on X, particularly with SLV. And so if you're a Bitcoin trader, I would tell you that the charts are telling you to keep your stops in place and to protect. Why? Because if you look at that moving average, it's acting as resistance. Here it tried to go up, but it didn't close up over that 20-period moving average. Same thing. Popped its head for that high over the moving average and came right back down and pivoted lower. Same thing. It didn't close over that 20-period moving average, but instead it's closing with a lower high, lower low. A couple of things I want to point out. There's some economic information here coming from Bank of America Global Fund Manager Survey. We're looking at the international markets and look at this chart. It's showing the biggest drop in U.S. equity allocation on record. That is pretty incredible. And so this is what global fund managers look at, and that's quite significant. Now, on the heels of that, looking at the domestic households here in the U.S., they're basically running out of emergency funds. not on our team put this out to the VIP chat room today. And oh, by the way, if you want to try the Nod Live service, which is nonstop, very relevant news that's breaking, if you want access to that, we also have a 15-day trial for Nod Live. What you could do is take your phone right now and open the camera and just scan the scan code right here, make it easy for you, and it'll bring you right to the site so you could try it out. We're trying to make this as easy as possible for folks that are checking us out and also for our members. You know, I have a great time putting these videos together. If you are liking them, please let me know. Hit the like button, leave some comments down there, hit the notification bell on top. And if you would, please do us a big favor and share this link to our YouTube page with all your friends and family members who are in the market. We'll do our best to show them how to navigate this very choppy market. Have a great weekend, and we'll talk to you next time. So long.
In a world of endless data, where every second counts, introducing Nod Live, your professional compass in the chaos of the stock market. Nod Live cuts through the noise. Stay ahead with Nod Live.